Hello everyone, we are Skeptix Capital, and today we will present our portfolio management project for the capital market course. Our team consists of 5 members. Our investment approach is guided by several key investment objectives. First, we aim to achieve medium-term capital appreciation by making disciplined investment decisions rather than pursuing short-term speculation. Second, we focus on the intersectoral risk diversification to reduce exposure to unsystematic risk. In addition, this project allows us to apply capital market theories in a practical settings, while also optimizing risk-adjusted returns through structured portfolio management. To achieve these objectives, we apply several investment strategies. We conduct periodic evaluation of our portfolio to ensure it remains aligned with market conditions. We also use sector-based portfolio strategy supported by fundamental analysis to select stocks with solid financial performance and growth potential. Finally, we apply a margin of safety approach to protect capital and manage downside risk. In constructing our portfolio, we apply a top-down approach, starting from macroeconomic analysis before selecting specific sectors. At the global level, we analyze factors such as commodity price, geopolitical risk, global trade stability, and monetary policy of major central banks. At the regional level, we consider demographic trends, capital flows, infrastructure development, and interest rate conditions. At the country level, our analysis focuses on the exchange rate stability, fiscal policy, industry regulations, and labor market conditions, as these factors directly affect corporate performance. Based on this macroeconomic analysis, we then determine sector allocation, ensuring that our portfolio is aligned with prevailing economic conditions rather than relying solely on individual stock performance. This slide presents our week 1 strategy, which marks our initial entry into the market. During week 1, our focus was on portfolio construction, not performance optimization. All positions were initiated with a minimum holding period of 2 weeks, so there was no selling or rebalancing at this stage. We maintained a relatively high cash position of 55% to manage initial market risk, while the remaining allocation was invested across selected stocks. This structure allowed us to reduce volatility while gradually building equity exposure. At the end of the week 1, the portfolio's NAV was recorded at 988,923 rupiah with no additional capital inflow. This NAV serves as the baseline benchmark for evaluating portfolio performance in the following weeks.
For the weekly allocation and rotations, the portfolio underwent a significant structural transformation from week 1 to week 12, which in weeks 1 to 4, we maintain a heavy exposure to the finance sector like BBRI and BBCA, and also the industrials like ASI and DRMA. However, starting in weeks 5, there was a noticeable shift toward increasing cash at hand, which peaked at over 84% by week 12. And also in the middle period, which is weeks 9 to 12, we saw a tactical rotation into the energy sector, specifically through ENRG, MEDC, and BRMS, which grew to represent over 40% of our total assets by week 9. And by the end of week 12, the portfolio had largely exited most equity positions, including the complete divestment from finance and technology, resulting in a capital structure dominated by cash.
Portfolio, Skeptix Capital consistently outperformed all benchmark over the 12-week period. We achieved a total cumulative return of 35.35%, significantly leading the IHSG at 7.11% and the Nikkei at 9.90%. While benchmark displayed high volatility, we maintained more frequent positive returns, peaking in week 4 with a gain of 7.32%. We closed the observation period with a strong final weekly performance of 5.97%. And then our CAGR of 7.51% firstly outperformed the global S&P 500, which declined by 0.40%. In conclusion, our active management strategy successfully delivered superior growth compared to all local, regional, and global indicators.
Okay, thank you to my colleague. And now, view the stats on this page. The data is plain to see. Skeptix Capital, or SKC, did well. Exceptionally well. Look at the blue box. We beat the local index, we beat the Japan index, we also beat the US index. Let us examine the values. Value 1, the Systematic Management Index. We sit at 0.03. Look at the local and global index. They are negative. We stay positive. We manage the beta well to give you gains. Value 2, the efficiency. This is massive. We hit 0.808. The baseline is low, only 0.2 or less. This gap is huge. It means we the most efficient choice. We give high income with low volatility, maximum gain, minimum shaking. Okay, the last value is alpha. It stands at 0.021. This positive count shows we have skills. We add value above expectation. We beat the indices. In sum, Skeptix Capital is the best choice to manage funds. We maximize gains, we avoid big loss, and we stay ahead of the globe. Choose us.
To demonstrate the scalability and valuation accuracy of the Skeptix Capital, we stimulate the entry of the new investor at the conclusion of the week 12. So let's start with the valuation at entry. So we have based on total unit of 5,000 unit issue at the closing net asset value per share is 1,300 rupiah. This reflects a significant appreciation from the initial week 1 NAV of 900 rupiah. So a new investor requesting 100 units will be required to provide capital inflow of 100,000 and 35,000. So they ensure the investor pay the fair value of the asset today, preserving the return earned by the founding partner. Following the inflow, Skeptix Capital total asset under management expand to 9,902,000 rupiah with a 5,100 unit of outstanding. The NFPPS remaining constant at 1,300 rupiah, demonstrating a prices and a non-dilutive accounting process. Okay, now for the self-evaluation from my side, I feel absolutely very satisfied as the portfolio saw consistent performance and was managed with a disciplined structured investment approach. And which the process that I like best and which the least. I think I very enjoy the monitoring process for each real-time performance assessment, while I think I least like the execution phase where market volatility often hinder the optimal entry and exit. And I think I will prioritize to strengthen our risk management by incorporating more proactive adjustment and stop loss trigger during the period of high market volatility.
For the firm self-evaluation comment for the first question, yes, overall I'm satisfied as the portfolio shows consistent performance and is managed with a disciplined and structured investment growth. For the second question, I like the monitoring process the most because it allows timely assessment of performance, and the least is the execution phase, as market volatility can limit optimal entry and exit timing. And for the third question, I would like the company to strengthen risk management by incorporating more proactive adjustment during periods of high market volatility.
Okay, so overall, I'm highly satisfied with the portfolio's management as it achieved a consistent performance through disciplined profit taking and tactical rotations. And the part of the process that I like best is that I enjoyed seeing successful returns and monitoring the stocks in real time, but I also dislike it when the analysis failed or when market volatility made execution difficult. And if I can repeat the process from the beginning, I would like the company to implement faster sector diversification from week 1 and implement proactive risk adjustments to better navigate market instability.
Overall, I am very satisfied with the portfolio management as we achieve a return of over 20% in less than 6 months, while continuously learning throughout the process. The most enjoyable part was seeing our stock analysis generate positive returns, while the less enjoyable was when certain analysis did not perform as expected, which reminded us of the risk involved in investing. If I were to repeat the process, I would prioritize earlier and more frequent team discussions when selecting stocks. A stronger collaboration could further improve portfolio performance.
If you ask me that, do I satisfied with the company? Yes, I am happy. The gain was huge. We beat the local index, safe and sound. The best move? We changed stocks. And the bad bit? The beginning was shaky. If we do it again, I want a deep connection a bond, and a discussion.
Okay, now we start with the strategies of the first week, which is the very beginning we are choosing our stock. This week we selected stock from the various sectors to diversify our risk. We are maintaining each position for a minimum holding period for a 2 week, and at the end of the week, our net asset value of the portfolio was updated to be around 4,944 rupiah, reflecting the initial stock position and cash balance and serving as a benchmark for performance evaluation in the following week. So we have several stocks start from PTBA, BBRI, DRMA, Wi-Fi, ASI, and the rest we held as a cash as well. There is no rebalancing strategies in the book in the first week, and our portfolio review will begin after the week to evaluate the stock performance. And risk management is primarily achieved through diversification across multiple sectors.
For week 2, our management team transitioned from initial analysis to active portfolio building. Our objective was to leverage market momentum while maintaining a disciplined framework to protect our capital. The first thing, this is the review of the stocks that we keep, buy, and sell for this week. We maintain our core position to keep the stocks of PTBA, BBRE, DRMA, Wi-Fi, and ASI to preserve our baseline exposure in essential sectors. And then to capture growth, we increase our stakes to buy BBRE, BBCA, Wi-Fi, DRMA, and METC, specifically targeting stocks with high technical momentum and strong fundamental anchor. And then we executed no selling actions in this week as all assets remain within our risk tolerance levels, allowing our winners to continue their upward trajectory. For the industries, this is the diversification chart that our portfolio is diversified across the industrial, financial, energy, and tech sector to spread risk across different economic cycles. Our top 3 holdings for this week is in Wi-Fi at 18.72%, followed by BBRE 14.8%, and BBCA at 14.7%. And the digital lead is heavy weighting in Wi-Fi, reflects our high conviction in the digital infrastructure sector following its exceptional weekly performance. For our rebalancing strategy in this week, our primary strategy is involved adding Wi-Fi, which benefit from positive sentiment surrounding fiber optic adoption along railway corridors. And we bolstered our banking exposure with BBRE and BBCA as stable interest rate projection provide a reliable backbone for the fund. We strategically added METC and PTBA to diversify into the energy and industrial sector for broader market coverage. For the risk management, we are maintaining a 17% cash position to provide a safety net and ensure readiness for future market entries. For the NAV calculation, in the right, we began the previous NAV of 998.923 rupiah. Our calculation is based on a fixed 5,000 shares outstanding, assuming an initial par value of 1,000 rupiah of our 5 million rupiah total assets. With zero new capital inflow, our strategic buys led to an organic growth of 0.8%, resulting in new NAV of 1,000.
Okay, so in week 6, our portfolio strategy shifted toward a more defensive and balanced positioning while maintaining selective growth exposure. So for the stock selection itself, sector rotation remained our core approach, which ASI continued as a high conviction cyclical holding and delivered a strong 10% unrealized gain. And we also initiated a new position in BSDE, entering the property sector at a key technical support level around 985 to secure a favorable cost basis. And the portfolio itself transitioned from aggressive momentum to a defensive growth hybrid and sector exposure was kept to manage concentration risk. And for the performance itself, the total NAV is closed at 5,400,000, with NAV per unit reaching around 1,000. And it's indicating positive performance despite active rebalancing. And for the rebalancing strategies, gains were partially realized from BBCA, Wi-Fi, and DRMA to strengthen liquidity, while MEDC was held despite short-term weakness based on its fundamentals. So overall, Week 6 emphasized risk control, disciplined execution, and also steady value growth.
On this slide, we present our strategy and portfolio actions in Week 5. In Week 5, the portfolio experienced a decrease in net asset value, declining from 1,072 rupiah to 1,045 rupiah. This decline was not caused by poor stock performance, but mainly due to sale of several stocks that had previously recorded price increase. These transactions were part of a profit-taking strategy, which increased our cash position and reduced equity exposure. Starting with the keep, buy, and sell decisions, we maintain positions in BBRI, DRMA, ASII, MEDC, dan WIFI, as these stocks still align with our sector outlook and diversification strategy. During this week, we added CDIA to the portfolio. The decision to buy CDIA was driven by strong net foreign accumulation, which indicated institutional buying interest despite short-term price correction. This allowed us to enter the stock at a relatively attractive level while strengthening exposure to the industrial-related sector. On the sell side, we reduced exposure to PTBA, BBCA, BBRI, and Wi-Fi. These stocks had experienced significant price appreciation in previous weeks, and selling them allow us to lock in realized gains and avoid excessive concentration risk. Looking at the stock allocation chart, the portfolio now holds a higher cash proportion of approximately 56%, while the remaining allocation is spread across banking, industrial, technology, energy, and cyclical stocks. This reflects a more defensive positioning following profit realization. In terms of diversification, the portfolio continues to maintain exposure across energy, finance, cyclical, technology, and industrial sectors, ensuring that no single sector dominates the overall risk profile. For rebalancing strategies, our approach in Week 5 focused on selective selling outperforming stocks rather than brand portfolio restructuring. This allows us to capture gains, adjust exposure levels, and improve portfolio flexibility without exiting the market entirely. Regarding risk management, our main focus is diversification and liquidity management. By maintaining a high level of cash, the portfolio has a safety buffer against market volatility and remains ready to take advantage of future market entry opportunities when conditions become more favorable. Finally, in terms of NAV calculation, there was no new capital inflow during this week, and the number of shares outstanding remained unchanged. The updated NAV of 1,072,475 rupiah now serves as the reference point for evaluating portfolio performance in the following weeks. Overall, Week 5 reflects a shift forward a more cautious and disciplined strategy, prioritizing capital preservation while maintaining flexible for future growth.
Hello, welcome. We meet again. This is Skeptix Capital. Today, we look at the plan. We look at the past few days. The time is late month 11, week 10. We have a goal, a simple goal. We want value, we want the assets to go up, but we also want safety. We do not bet blind. We use a method. We use fundamental analysis. We pick the best stocks. We look deep, we find the value. Look at the top of the page. You see the text. It says we use a momentum plan. It says we did well. And the total asset value went up. It is a good gain. A good gain. The sum is now high. 6,041,861. We feel good about this. And now let us discuss the moves, the actions that we took. Look at the box that says sell. You see CDIA. We sold it. Why did we sell? It was time. The stock went up first. It was a rally, a momentum jump. When the stock jump high, we take the cash. We do not wait too long. We take the gain and we sold a batch, 200 stocks. The cost was 2020 and the gain was good, 39,500. This is discipline. This is how we manage. We buy low, we sell high, and we lock it in. And now look at what we keep. The list is long. ENIG, BRMS, Medco, Goto, ISII, BSDE, and Wi-Fi. We keep them all. Why? Because we see value. We see hope. Look at the mix. Look at the long hue bar. The blue is big. That is the mining and fuel stocks. ENIG, BRMS, Medco. The deep blue is Goto, attached play. And the black is ISE. The pink is Wi-Fi, and Wi-Fi did it well. And RC too. And Medco, it down a bit, but we still hold. We do not panic. We do not sell on a dip if the company is good. We hold and we wait. Now, look at the end of the bar, the pink box. Cash. We hold cash. A lot of cash. Why? Safety. When we have cash, we have a choice. We can buy new stocks if they fall. We can wait, and we are not stuck. This fits our philosophy. We balance, we mix, and we do not put all funds in one spot. We split it up: mining, tech, buildings, and cash. This is the way to stay safe. This is how we avoid a big loss. We stay fluid. Let us look at the final sum, the net asset value. Look at the blue box. The old value was 1,162, and the new value is 1,208. It went up. The plan is valid. The plan works. We did not add new funds, no new capital inflow. The gain is all from the stocks. The gain is from the tactical sell. The gain is from the momentum. We face the next week with hope. We stay disciplined, we stay calm, we stick to the plan. This is Skeptix Capital. We build value, we manage the stakes. Thank you.